If you're ready for freedom from the grind, then passive income from real estate investing is the best way to get you there. If you don't know where to start or what to do next, then the Rent Roll Radio Show is the best place to get you there. Join us while we discuss the best practices, strategies, and mindset you'll need and give you actionable content to get you from where you are to where you want to be. Hey, Rent Roll Radio listeners, as always, I'm your host, Sterling Chapman. Today, we are joined by a really special guest that I was super excited to have the opportunity to meet in person at a conference a few months ago. We have Leka, I'm going to butcher your last name, Devatha. Did I do that right, Leka?
It's Leka Devatha.
Leka Devatha. She is an investor out of Seattle. Thank you so much for joining us and welcome to the show.
Okay, thank you so much, Sterling. Nice to be here.
Can you tell our listeners that don't know you already a little bit about yourself and where you came from and how you got into real estate investing and what you're doing these days?
Yes, so I live in Seattle, Washington, moved here about 16 years ago, and I've been investing in this market for almost 10 years now. I have done everything from started off doing single family flips, but now I just buy large distressed property and then stabilize those either for long-term cash flow and appreciation or for immediate gain by flipping them. Additionally, I also host a meetup. I am a contributor to the Bigger Pockets YouTube channel. And I do like most of other things.
Aren't you the host of the Bigger Pockets conference this year?
Yes, I am.
That's awesome.
Awesome.
Congratulations.
Pretty amazing.
That's great. So how did you get started into real estate?
It's a funny story. I heard about real estate through a radio ad on my ride to work one day. But I just started to, once I heard about investing in real estate, I just started to dive deep and, dig in and learn as much as possible and start educating myself. When I first started, there were no podcasts like this one. Mm-hmm. Even the Bigger Pockets podcast was not around. And so it was like, okay, how do I go about learning this? So I joined a program by Fortune Builders, and they are real estate educators. And that gave me a really good understanding for the different asset classes and the types of investing. So if you are new to investing, don't be afraid to go join a mastermind or join an education program, because nothing's going to give you that foundation like just good education material. And that's what that course did for me.
Yeah. So many people like knock the courses, and if you have Instagram these days, you could probably see that the world's gotten carried away with them. Everybody I know has a course, but after interviewing 200 really successful investors, almost every single one of them swears by paid coaching, paid courses, paid masterminds. You know? And it's just like, I pay to be a member of GoBundance. I pay to be a member of a couple other multifamily groups. I pay high ticket prices for the conferences. I'm a big believer in paying for the education and to get into the right rooms. So what were you doing before? You said you heard a radio ad on your way to work. What was your occupation when you heard the radio ad?
I was in fashion brand merchandising for Nordstrom Corporate. So I was merchandising strategy, very different from real estate. But I think the one common element is that I was diving deep into the numbers of how different departments within Nordstrom performed. And so, I just loved doing that aspect. I like the math of it. And real estate is really, it all comes down to the science or the math of it. So that was like a common thread.
So you mentioned you started flipping houses, and now you buy larger properties that and stabilize them. Either are you syndicating apartment complexes? Is that what you mean by buying larger?
I have done a couple of different syndications, and my most recent syndication, like we bought a 12-unit apartment building, went from the rents that when we first bought it was $8,500. Within a year, we performed all of our CapEx, and we're now at $18,500 for rent for the same building. Wow. So that was my one and only true syndication where I am the operator and the general partner. But in all honesty, I don't like it. I don't like syndication. I don't like working with lots of different investors that, don't really have much say in the deal. Like, I like working with one or two investors that get full exposure to what I'm doing. So I liked the process of it. I like giving back to my investors something that they can achieve passively. But for the most part, I just feel like the returns that I typically get out of a single family flip or doing a project on my own, which is 95% of my other deals, I don't get through a syndication. And it's much longer term hold. You have less flexibility on how you exit it. So there's a lot of different things.
Yes. Yeah, yeah. I've felt all those all those pain points from every which direction as well.
Right.
Um, and to your point, managing investors is it's not always fun. You
It's
know,
not. Yeah.
a lot of a lot of the investors are great, and we love bringing in our friends and family, and then then help them passively, but it can go sideways. Like, people get pissed off when their K1s don't get in on time. People get, and they had a life change and they want an early exit, and I'm like, well, we told you it was going to be a 5-year hold. Like,
Yeah.
so there's or to your point, people wanting to get involved when they shouldn't be getting involved. Like,
Right. Right.
um, so I mean, we do both. Like, I don't raise capital. I don't syndicate like my flips and my rental properties and all that stuff. But we're, if we're doing a 100 unit, we're gonna, you gotta raise capital, or maybe you don't. I do. um,
Oh yeah. Yeah. No,
and
we all do. Like, it's the beauty of real estate is that you don't have to use your own capital. And so you don't have to be held back because of that one
yeah.
factor. There's lots of people willing to partner with you that have more money, less time, or experience. So
Do
that's the
you,
beauty
do,
of real estate.
do you mind sharing what these partnership structures look like? If
Sure.
you're like, what does that look like?
Yeah, so I have multiple different partnership structures. One is just debt. So I have an open fund and we offer a 9% return annualized yearly. So, I mean, yearly. And so that's just super passive. If someone has money, they want a straight up interest rate. Here's a good way for them to get that. It is backed by the company itself, which has multiple assets. And so they're not, it's a pretty safe fund. Another way to structure these deals is by an equity partnership or a JV agreement. And in that case, basically, say my deal price point is like $1 million, then I would get someone to come in and put in the bridge debt. So say I'm raising 200K for this deal. Someone comes in and puts in the whole 200K. They get 15% of the equity once we sell the property. So of the profit. And that's another great way to structure it. And the third way is same debt, but on a specific deal. So, like if I have a deal, then, they come in, they put the 200K, but they don't get any equity in the property when the property sells. Instead, a safer way for them to get back money is a 10% or 9% straight up interest rate. So it just depends on the partnership, the partner's level of confidence, or the partner's level, like tolerance to risk.
Yeah.
So yeah, few different ways.
Yeah, we do the same thing, and we offer the same, and it's so funny because with the debt partners, every once in a while they'll like, well, I want some of the upside. I'm like, okay, you can be an equity partner, but just make I want to make sure you understand that, like, you just got your X percent, and I just lost money on the last 3 deals. So if you're an equity partner, you came out ahead as a debt partner, especially in this environment, right?
And I also do that typically. Like, so right now I'm in the middle of doing our DADU project. So I'm building a DADU in the back of an existing house. So the
Could you
house is,
elaborate on what that is? Because our
yeah,
listeners,
yeah, yeah.
I'd never heard of that before. I heard you talk about it at the conference, but I want to
Yeah.
listen.
So it's so sad that you can't do this in NOLA, right?
Mhm.
Because your state law doesn't allow it, or the city law. So the Seattle City Council said that we don't have enough housing units and that we need to increase density for housing. So what they decided to do was, if there's a house on a lot, before it was 5,000 square feet, now it's even 3,200 square feet. But if there's a house, then and there's space in the back of the house, then you can actually put in a huge 1,000 square foot detached accessory dwelling unit. And so you can essentially build another house. Then this is the amazing part. You can condomize it, which means you can split the house
Subdivide.
and the lot and the dadu and sell them off separately.
Yeah, I wish we could do that.
Right. So when you do that, like, so say, so my current deal numbers, right? I'm buying the house for 560K. I am building the dadu in the back for 400, and then remodeling the existing house for about 70 or 80K. And then I get to sell each of those parcels for 730 to 750K.
Wow.
Yeah. So it's a good, like, 6-figure profit.
That's crazy. It's so you said it when you were in New Orleans, and now I'm noticing it here. It's so weird how the different areas have such price discrepancies,
Right.
like the houses we buy range from 25,000 to 250,000, and all of the
Right.
houses you're flipping, you're buying them for $1 million. That's crazy down here.
Crazy. Yeah, exactly.
Does one thing that makes me nervous about that whole process, and I know there's a lot of people that make a lot of money doing it, so I'm not balking at the process, but it was always made me nervous, is people that flip homes in California and Seattle and these like real high end areas. I'll hear like the profit is a lot. Like they'll buy a house for $1 million, they'll put 200,000 into it, they'll sell it for 1.5. I'm like, well, cool, you made 300 grand. Like that's a big hit. But I don't know what those numbers come out to, but when I look at it from a percentage point, like if you're, or a lot of people I'll hear like they're all into a property for 900K and they sell it for $1 million and they made $100,000. Yeah, but
Right.
if you had like a 10%, like if you went 5% over on rehab and you had to sell it for 5% less because of the market pullback, you lost out. You know what I mean? Like
Right.
it's just so in those higher end markets, do you find, I mean, do you do it based off a percentage? Do you do it based off of like your target profit? Like, how do you evaluate deals how do you evaluate deals with such high dollar? Like, cause you don't have multiple exit strategies. There's no way, right? Like that $1 million house is going to cash flow. You can't keep it as a rental. So like, how do you risk assess these flips?
Yeah. So the first thing is there are multiple exit strategies. So that's a myth. Because you can rent by room, short-term rental. You can do mid-term rentals. If the lot is big, you can put another structure on there. You can do additions on homes. Like and all these different exit strategies that I named, I have done personally.
Yeah.
So always look at the deal with multiple exit strategies and through the lens of, okay, what if it doesn't sell as a flip? Second, really know your market. So if you know your market and you're buying right, it doesn't matter what the market's doing. It doesn't matter where interest rates are. It doesn't matter what the rehab budget is. It does matter what the rehab budget is, but it doesn't matter that you went over your rehab budget by 5%. Now, I personally don't buy any deals unless there's a 6-figure profit going into the deal. Like, I won't touch it. From there, I'm like, okay, it says I can make 100K on
If I
paper,
screw it up, I'll make 50.
but how can I make 200K?
Oh, wow.
What are the improvements I need to make to this house to get top dollar for it? Let me tell you, the last 3 years, every flip that I've done, my minimum profit has been 130 to 150K. I have
Awesome.
not done a single deal where the profit is less than that because it's just not worth my time.
And how many flips is in that time period? Have you hit those?
I've done, I want to say maybe 10 or 12.
Yeah.
Yeah.
What has the market done to your process? Because I mean,
It's
obviously
helped
it's
me be
changed.
extremely flexible. It's like this year going in, I'm like, I don't know where interest rates are going to be. So I'm just going to bulletproof my existing portfolio. So what I did was I took my rentals and I said, okay, how can I increase cash flow here, cash flow here, cash flow here? Let me go add an event space to this building. Did that. Let me go convert this. I have a triplex. I'm like, what if I just took the center unit and made it an Airbnb? I did that. Increase my rents like double. And so like just looking at it and seeing, okay, what else can I do with this? Or let me go build another unit in this property, right? So I don't have to go buy more real estate. I can hold on to the existing real,
Right. Yeah.
use my own funds or raise funds to improve it. But also this year, when the interest rates were at its max, I was able to sell both my flips for way above the suggested ARV. On one flip, they said ARV was 995 and I sold it for 1.1. Now, how did I do that? Because I really fixed up the property. I fixed it up real nice. Like the rehab budget that was assigned to this property going in was 125K from the wholesaler. I ended up spending 175K. So I spent an additional 50K. But then at the end of it, I ended up making more money and I ended up walking away with $137,000 profit. Same for another property. We went in thinking, okay, ARV is 1.2. There's nothing in that area that sold for more than 1.2, plus interest rates are so high. Like maybe we should even be 1150. And I was like, no, this house is fully permitted, huge square footage. I know the product as it stands. I know what we did to it. I know my quality of finishes are not cheap. I know my quality of construction is beautiful. So I'm actually going to list it at the very high and we'll see what happens. So listed for 1.28. So 1.15 was a suggested, went up to 1.28, sold it for 1.24 in a week. I was very happy. So it just, if you, and it honestly doesn't come, that kind of confidence and expertise doesn't come right off the bat. I have done close to 100 flips at this point, and I kind of know the process and the mentality of a buyer versus a seller and how not to be like a desperate seller. So if you go in and you have all these different metrics in the foundation, right, then you can actually go in and make some ballsy moves.
Yeah, no, that is I feel like a desperate seller right now. So I would love more advice on how to not come across as a desperate seller. I got 10 houses sitting on the market.
You have 10 houses sitting on the market?
Yeah. Well, I have 4 that have been sitting for a while. I've got another 3 that will list this week that are in similar neighborhoods at similar price points. And then we've got 3 that are under construction. So I've got 10 flips that I need to sell, that I'm nervous I'm not going to be able to sell because the 4 that I've had listed have been sitting. And then the other 3 I'm about to bring online are comparable to the ones that have been sitting.
So they're going to act as negative comps to your existing.
Yeah.
Okay. So are you okay breaking even on these?
I mean, I'd prefer not to, just because, I mean, if I have to, I will, obviously.
Yeah. I mean, I would say like the way to really come out on top is by providing above market quality at under market pricing.
Yeah.
And if you can do that, then you're going to automatically create good comps for the bad comps. So if you can, the 3 that are coming on right now, can you under market, like, can you price it under market value?
Yeah.
Do you guys have the concept of bidding wars over there?
In 2021, we did. I mean,
You
we
did.
don't,
Okay.
we don't today.
Do you have a lot of competition in that market right now?
It's the inventory is creeping up. I mean,
Yes.
I got a house that we listed 3 months ago at 525. It's sitting on the market right now at 425.
Whoa. Can you go speak to a lender and say, I have 10 houses. Can you provide financing on all 10 at the lowest conventional price possible and offer that to buyers as, hey, This house comes pre-approved with a loan, and you can assume this loan.
Oh, nice.
And this could be cheaper than any loan you can find outside. Go find a lender that'll give you, like, closing credits, that'll give you percentage points down to go finance with them. Because if you're hurting as a seller, then lenders are hurting as lenders, right? You're gonna find a desperate lender too that is going to be okay not making as much cash just to be able to lend on the 10 homes. Like, you have volume to your advantage, so use that.
Yeah, absolutely.
And then go
So
look at each of these homes in, different lenses and see, like, what can your exit strategy morph into? Short-term rentals, mid-term rentals. What does that area need? What area specifically is this?
this is, I mean, this is Baton Rouge and between Baton Rouge and New Orleans. I
Okay.
mean, the houses are anywhere from 300 to 450,000.
Okay.
Which
Got it.
which are really big, nice houses in South Louisiana. I know that would be like a crack shack in Seattle, but
Yeah.
that's like a 3,000 square foot house in a nice neighborhood here
Man, amazing.
with a big yard. Well, like it's
Yeah.
yeah, that's the top of the market here. I mean,
Yeah. Yeah. I mean, yeah, and all neighborhoods are different. Um, but if you can price them below market and see if you can get, like, people to go bid it and go crazy, and or at least bring them through the door, then you
yeah,
have some. So price it to sell it.
yeah. I am. It's
Yeah.
painful.
It is very painful. But the whole thing about real estate is there are lots of ups and downs, and this may not be your year, but imagine the experiences you get from this and what you can convert that into next year. So
Right.
don't get discouraged, but at the same time, take these learnings and know that you now have a skill that not many people have. And that if you can ride the down wave, then you can definitely get to the top wave.
Yeah, absolutely. So staying alive till 25.
That's it. That's it.
So where do you find your investors?
Um, so I host a networking meetup.
Mhm.
And the main goal for the networking meetup is to get people together in a room, to be able to solve their problems. So we have amazing investors that show up, people that are really doing the work, and people that are uh, out and about finding deals, doing deals. And one way to attract that kind of crowd is by having amazing speakers. So I find the best of the best speakers and I bring them and I interview them and go really dig deep into their business. And by doing that, what we can offer to these investors is a very in depth perspective into what it takes to find a deal, flip a deal, talk about seller financing, talk about mindset, talk about wholesaling properties, talk about selling deals, talk about buying deals, talk about how to fix up the deals. Like, we offer so many different topics and just, make it really interesting to a listener.
Awesome. And how did you get hooked up with Bigger Pockets?
I attended a mastermind that Brandon Turner hosted with my friend Tal Yarber. And it was a pretty exclusive mastermind where you had to be invited to join. And because I was a local Seattle investor, Tarl invited me to join this. And that was my first time I even met Brandon. And he invited me to go on the Bigger Pockets podcast. So I became part of the podcast series.
Nice.
And then as I just started doing more and more work and on social media and just on Bigger Pockets, I think BP kind of saw me as someone valuable doing big things. And so then I got invited to speak at the rookie conference, and the crowd loved me. And so, and then things just, like, I kept getting more opportunities to be on the YouTube channel and to contribute more. And it's pretty much what happened.
So what's next for you?
Mm, I'm going to continue doing deals that I love. I'm going to continue to learn. Like the Dadu construction for me is a brand new venture. Like I've never done anything like this before. So if it works, then I'll do more. But I think it all starts with finding that deal. So what's next is I'm going to just, continue to find those amazing deals and add to my portfolio. Um, and continue to educate. So nothing new, just same old.
So,
Yeah.
so what advice do you have for somebody who's like looking to just get started?
Just get started.
Yeah,
Just get
that's great.
started.
That's great advice.
No, it's like
It's like Nike, just do it.
just do it. And then the thing is, like you can hear as many podcasts as you want, read as many books as you want, but until you actually do it, you don't know if you have the metal to do it. And
So,
like, look at you, right? Like you're like, oh my God, like what do I do with my portfolio? What is that going to do to you? It's going to make you that much, it's going to add an armor to your being
yeah.
that next year, when you have other deals that you have to go tackle, then you know what to do. But someone that never took that step is not going to understand that. They're not going to live in be in your shoes. They're not going to.
Well, another like, so I host a meetup as well, and I was at the meetup last night. It just happened to be last night, and some newbies are always kind of like asking, like, well, where do we get started? And so, like, where I get hung up sometimes responding to that question is like, I have 80 rental properties in South Louisiana that, like, when I started buying rental properties in 2018, I just started burning them and just, that's how I built up my rental
Yeah.
portfolio. But like, they all made sense because they've got like 3 3/4 or 4.25 debt on them, right? Like when I was doing that, you know what I mean? I would buy them cash, hurry up and refinance them with a small local bank, get like 5 stacked up with a small local bank. And the small local bank's like, okay, well, we got enough here, go sell some or something. And so then I'd call like Aloha Capital and they'd refinance into a big, portfolio loan on a 30-year AM. And so I would just do that. And that was my process until the interest rates skyrocketed. So, so not only did my burrs not work anymore, but we're kind of having trouble with selling the flips as well. So it's like, how do I responsibly respond to these newbies? Because like I got beat up a lot this year, but like I had the financial foundation to take the abuse.
Right.
Whereas some, you know what I mean? I'll just sell off some rental properties.
Yeah.
I'll pull it from here. Like these newbies that, you know what I mean? Like they don't have the financial foundation to screw up as much as I do. So it's like, what
Yeah.
advice do you give to them?
I always say go mentor someone that's crushing it in your area. And the way to do that is find the money, talk to an uncle or fundraise or like, start a YouTube channel, start an Instagram page, start adding value and find a following that will actually follow you and trust you enough to maybe finance your next deal, right? So if you come with no money, learn to create that money passively or wholesale deals or become a real estate broker. These don't take much capital to get started at all. So there's so many different avenues to just get started. Then if you do actually have the money and have no experience, then go find a Sterling in your city and go shadow Sterling or someone like Sterling and understand how they are reviewing deals, how they are closing on deals, how they're fixing it up, and how they're selling it. And if you go through that life cycle with someone, then suddenly you have that experience without having to take on that risk.
Sure.
And how do you get those mentors to mentor you is you either fund them their down payment in the next flip or find the money somewhere else or find the deal for them or just do the work and don't expect anything. Like just like I have a guy that constantly hits me up. He's like, "Hey, how can I help you? Can I take photos? Can I go to the property for you? Can I talk to your contractors? Can I project manage?" Doesn't want anything in return, doesn't expect anything in return. All he's wanting to do is learn.
Mm-hmm.
So there's so many ways that you can get plugged into the circuit.
Absolutely. And I think people, what I find a lot of times is newbies are shy and they don't want to bother people, right?
Yeah.
But the funny thing about that is most of the older investors that I've met that have like been around the block, they would love to sit there and pour
Yeah.
into some young kid that's just getting started. Like there's nothing they'd rather do with their time. Like that's where I learned a lot. Like is just like when I first started buying, like just meeting up, I'd like look on realtor.com and I'd like some of the and I'd find like, multi like, duplexes I wanted to buy and I'd reach out directly to the owner. And it's like some old man who's been collecting units for 60 years and 1031 on them. And then he ended up, after just talking to him and getting to know him, he ended up seller financing me like 30 units at like nothing down. You know what I mean?
Exactly.
And
So seller finance is huge right now. That's a great way to get started is just go find seller finance deals because you are you're providing value to the seller, right? You're
yeah.
paying him his
It was
market.
his idea. That's so people. That's another thing. People don't want to bring like newbies and stuff. They don't want to bring up seller financing because
Yeah.
they think it's an imposition. They think they're asking for it. But in this circumstance, this guy, like I said, he was in his 70s. He had been 1031ing properties for 30, 40 years, you know what I mean? And so
Yeah.
if he sold all those properties outright,
Right.
he was going to have an enormous tax liability that he didn't want. So he seller financed them, and
Yep.
now he just takes a little bit of the hit each year. Another thing is he didn't have anything to do with the money if I paid it, so he's happy to be getting the 6% that I'd locked in.
You have no idea how many people are in that position right now because people had such a low interest rate for so long and they've mostly paid off that debt that they are now in that position to offer that to people, and most people don't need the money. They'd rather get paid on a monthly basis than
Right.
get paid one chunk at a time because they don't have the bandwidth to go to a 1031 or
Right.
yeah.
Yeah.
So I would say explore that. That's a great way to get started.
So, and,
And go
and
follow Cody Davis. He is like the
who?
master of seller financing.
Cody Davis.
Cody Davis. Yeah. Cody doing Cody things. That's his
Uh,
IG.
I'll check him out. I hadn't heard of him. I'll
I,
I'll
I interviewed him at my meetup last month. So that video should be up on my YouTube channel too. So
Awesome. Well,
yeah,
if I'd love an introduction if you think he'd be a great podcast guest.
he would be amazing.
Awesome. Awesome.
Yeah.
So let's hop to our radio round. It's just three quick
Okay.
questions to help our listeners get to know you a little bit better. So the first one is, what's your favorite book?
Um, I always say this if you're just getting started in real estate, the book on rental property investing by Brandon Turner has been one of my favorites.
Yeah.
A lot of people say Rich Dad Poor Dad, but this is a book that really teaches
Yeah.
you on how to hold your rentals.
Yeah. So whenever friends reach out and ask, like, "Hey, I want to get started in real estate investing. Where do I start?" I'll tell them, I'll send them a copy of both books. I'll send them. Well, I'll say start. I will say read Rich Dad Poor Dad,
Yeah,
then read Gary Keller's Millionaire Real Estate Investor, and then read Brandon Turner's book on rental property investing.
all three great books. Great books.
I think that's like the starter kit. I was like, call me when you're done with
Exactly.
those three, and I'll give you three more.
Yeah, exactly.
What's your favorite quote?
It is actually very relevant to what we were talking today, especially just getting started and doing it. It's a quote by MLK Jr., and it says, if you can't fly, then run. If you can't run,
Yeah,
then
run,
walk.
walk.
And if you can't walk, then
Can't
crawl.
walk, then crawl.
But whatever you do, you have to keep moving forward.
Yeah,
Yeah, it's one of my favorites. And it's
that
one of
is
my like life principles too.
that's great. Yeah, no, I shared that on Facebook not too long ago. That exact quote. Awesome. What's your favorite thing to do when you're not working?
Traveling the world. I like
Where do you like to
going away
travel?
to far off countries and disconnecting from work.
Awesome. How can our listeners get in touch with you, learn from you, connect with you?
Yeah, so I am pretty active on LinkedIn and Instagram, and you can find me just by Googling me, Leka Devatha. And yeah, and reach out to me. I'm always happy to help.
Awesome, Leka. Thank you so much for joining us. I really appreciate it. I learned a ton, and I've got a list of actionable items that I'm going to go do to my portfolio when we leave, and I'm sure our listeners got a ton of value too. So thank you again for
Awesome. I'm
joining,
so glad. Thank you.
and I really look forward to keeping up with you on your journey.
Thank you, Sterling. Same here. And good luck with all those listings. Tell me how it goes.
Thanks. This episode was brought to you by Crestworth Capital. If you're a busy professional and ready to make passive income from real estate investing, then go to crestworthcapital.com, where you'll be able to download a free copy of our ebook to help you get started today. Until next week, happy investing.